If you spent years successfully managing your own investments, do you really need to work with a financial advisor? Today, we're going to kind of work through a scenario from someone that is pretty wise, pretty smart, has done well in the past, but now they're getting closer to retirement. Do they need that extra help? And is there value there in working with an advisor? We'll talk about that next with Ryan. Welcome into Perfect Game Retirement. I've been George with Ryan Ledden. He is a certified financial planner, also financial coach and president at Black Oak Asset Management, serving a lot of the Atlanta area and Georgia throughout the state. And Ryan, I like this topic today because there are a lot of people that have success on their own, right? That manage their investments and do things the right way, but there's just a lot of things that maybe they're just not aware of.
Yeah, I mean, we come across a lot of people. I mean, there's people that are in a different career field, but they really enjoy doing this. And the accounting brains, the engineer brains out there, very analytical types. There are many that can do this on their own, maybe not as quite as efficiently as maybe they think, but it's some people enjoy doing it, so they don't see value enough to pay an advisor, and that's where, as our firm grows and we continue to work more people, is what all we do. It's not just the days of just a stockbroker. Those days are gone. And if that's all you do, then you're going to be replaced. So there's so much more to it. The investment management side is just one piece of it, if you will, and we'll get into that more on the show. But there's a whole lot more to do than just the investment management. And some people think that's kind of all it is. They've done good jobs. Oh, I've got good returns, and if that's all they look at, then they'll never see value in an advisor if they're only looking at the rates of return.
Yeah, no question. And as we talk about this too, remember, speakwithryan.com is the easiest way to book a time with Ryan and start that process and just kind of learning more about what his team can do and how they can help you out. But here's kind of the scenario that sparked this conversation, Ryan, from someone that has an MBA, says they understand their investments well and they've handled their portfolio themselves instead of having any professional help. And they've always done pretty well. And they just really want to know, is there any reason for me to work with an advisor? So I know that someone in this situation is obviously pretty confident in their skills, and rightfully so. They're bright, they're intelligent, MBA, has success. But beyond investments, where do financial advisors typically provide that value that maybe DIY investors might not even consider?
Yeah, I mean, there is a whole bunch, and I'm just going to flash this in front of me. This is like a little wheel and a spoke, and this shows like everything that every component that we look at and help people with. And I mean, one off top, estate planning. That's a big component that we do. We give access to our clients for an online tool that they can do their estate plan. Now, some people still need to see an attorney, but we have software and access we give clients to that they can do a will, they can do a medical directive, financial power of attorney, everything you can do except for really a irrevocable trust. You can do a revocable trust in there. There's a lot of different things that it can do, and most people that's all they really need. But if you get into the blended families in the depths of estate taxes, and okay, maybe you still need to see an attorney, but estate planning, we look at tax efficiency. We want to be as tax efficient as we can be. So we do look at taxes. We do look at people's tax returns. We upload those into our software as well. We've even partnered with a firm that helps with the tax preparation. We don't have any accountants in our office here, but we partner with a firm that we give access to that, because it's hard to find a good tax planning firm. There's just a lot of firms that people that I used to refer out, they just don't accept clients anymore. They're at max capacity. So finally, we found a solution for our clients to help with the tax prep, not only just the tax efficiency part of it. Obviously, income planning when it comes to retirement, that's kind of in my wheelhouse, is taking all the pieces of the puzzle and putting them together, and what kind of income is it going to generate. We do insurances, so basically risk management. We'll do long-term care, life insurance, annuities if it's a fit. So and then we do Medicare plans for our clients. So we cover that as well. So from a financial planning standpoint, there's really not a piece of the puzzle. And that's what we built, and we worked really hard to build up, to have every piece covered. And for a while, it was the estate planning thing. We just didn't have a solution there, but we got that. Tax preparation, we didn't have a solution for that, but we got that covered now. So we try to be as all encompassing as possible. So that way clients, when they come on board, they stay with us.
To a certain extent, it's almost the easy part is investing, right? Not to downplay a successful investor. I mean, that obviously is a skill, and it's valuable, but it's almost like that's kind of the easy part and the kind of low hanging fruit of the entire picture. Because when you start trying to put all those puzzle pieces together, it's very tough to do on your own, especially when you don't have experience or have a team that you work with and people that you have relationships with that you've done this before. But I know to this point in this conversation, it's almost like that's the easiest part of this whole process is the investing.
It is. I mean, that's the commodity side of what we do. I think, and still for some people, it's like a foreign language. They want no part of it. They don't. So for some, it's still it could be a difficult part. But we're not day traders. We don't do all this option stuff. I mean, that's just not us. We don't believe in it. And so we're the long term. Do we look at opportunities? Yes. Does the software the trading software that we use, does it look and check every single day? Yes, it does. But again, we're not swapping things in and out, buying this, selling this. It's just, we don't do that. So, but yeah, the investing part for them, it can kind of be relatively easy depending on who you are and what you're trying to accomplish. So, and I tell people, if that's all they're really looking for, you don't need us. You don't need an advisor. So, but when you do get to retirement and then you start, because the accumulation phase is one thing, the decumulation phase is another. It's reverse engineering. So sometimes people may be very smart on the accumulation side, but then it's like, okay, how do I efficiently take this money out? And it's a completely different animal there.
Yeah, no question. And a lot of what you talked about is things you can control, right? The state side, the tax side, these are things that you can kind of plan for and know. But there's also things that pop up out of nowhere. And we know this in life, right? Things you don't anticipate that come out of nowhere. And I think that's another spot where DIY investors, while they might be good at the planning and kind of growing that money over time, what do you do when some of these things pop up that you don't anticipate? So I'm kind of curious what some of those blind spots, maybe, we'll call them, that you see from people that don't work with an advisor?
Yeah, I mean, one off the top of my head is new laws that come about. I mean, we've had the Secure Act, which changed things, and then the Secure Act 2.0, and that changed things. And the minutia of these laws that come out, it's like, my goodness, what were they thinking on some of these things? And so trying to navigate that, just you know what year you're born in depends on when you start your required minimum distributions. I mean, and then depending on when a person passed away and you receive their IRA, one could be a stretch IRA, one has to be an inherited IRA that you have to take out within 10 years. So there has to be, the death had to happen by a certain date. It's like, oh my gosh. So just keeping up with those things, that's where usually an advisor just kind of pays for themselves, if you will, is just navigating these new laws that come about. Obviously, we have a new administration now. Probably something's going to change again, probably for 2026 when it comes to tax law, which has a lot to do with what we do. So staying ahead of that. Again, emotional decisions. When a big event happens in someone's life, whether that you lose a spouse, we really try to hold their hand and be like, let's not make any big decisions right now. Let's let this simmer, because when you make emotional decisions, a lot of times they don't end up in the way you think they're going to end up. And so that's why we're there as a voice of reason to just kind of pump the brakes on this. I'm not saying you can't do this or can't do that, but let's pump the brakes on it, because you may feel very different in 6 months or even a year from now. So we try to mitigate that emotional decision making. New tax laws, again, tax inefficiencies, because a lot of times when I mean tax inefficiencies, it's not only like what investment you own, it's what account do you own that investment in, because they can be taxed differently depending on what type of account they're in. So it's not only what you own, it's where you own it, because again, it can be taxed very differently. So if we can just save people on taxes just by placing this investment in this account versus this account, well, if you're saving on taxes, then again, that's where we help pay for ourselves and add value to people's lives. So there's a lot of navigation that goes on that if people have a full-time job, they're not going to be able to keep up with this stuff.
Well, then let's just address directly then, Ryan, just to someone that might be in the situation, whether this person specifically that asked this question or just anyone that's watched this video trying to learn, okay, what is the value? Why do I want to do this? I'm still kind of skeptical because I can still manage my money and feel pretty good about where I am. And I don't want to pay the fees and the costs that are associated with an advisor. So address the skeptic for us as we kind of close this out and kind of, hey, why would you take this next step? Why is it so important if you haven't gotten that message yet?
Yeah, there's even a study that came out several years ago by Vanguard of all companies, who are the DIY company themselves of investing on their own. And I can't remember the exact date when it came out, but it said advisors can add up to 3% of value each year. Doesn't mean we're going to beat the stock market by 3% every single year, but it really boils down to the behavior and coaching aspect of it. That's why we like to talk about that side of things so much, because that's where we make the biggest impact. Again, with software and the analytical data that we do have, a lot of that stuff is done by technology. It is. Obviously, we have to pay for it. We have access to those things. But when it comes to the behavior side of things, how we take money out, when we buy this, should we not buy this? I mean, that's a huge, so that's where that study comes into play. And just like any other aspect, if you want to take yourself to the next level, usually you hire someone to get you there. Was it Derrick Henry spends like what was it, like $250,000 a year just on things that help his body, and coaches that help him. You may look at him and go, "What is that guy? What in the world does that guy need help with?" I mean, he's the biggest monster on the field. And runs faster than almost anybody on the field, but he spends a ton of money, things to keep his body in shape, and hires coaches to get them to that next level. So in many cases, you hire a personal trainer, you hire a CPA, you hire an attorney. I mean, you hire that person to take you to the next level.
Yeah, I love that. Yeah, you see the even the greatest ones, to your point, invest in getting better, and there's always people that can help you out. I think you're always better with that synergy of having people on your team, and the value of that bond is worth a lot, and that information that you gain and that experience that you can gather from other people, which is what you do, right? At Black Oak Asset Management, having that experience working with people and seeing a lot of different scenarios and helping people find the right path to reach their goals in retirement. So if you have questions, want to learn more, just start learning about the process. You can go to blackoakam.com. A lot of information there about Black Oak Asset Management. But if you want to just go ahead and start that conversation, that process, go to speakwithryan.com. All right, we appreciate you watching this episode, and we'll have another one coming soon. Make sure you subscribe. All the support there and helping grow the channel really helps us a lot in the future. We've had a lot of people watch some of the early videos, so we appreciate that as well. Ryan, thanks for your time.
Thank you.